It's still price discovery. The price is still based on what a person is willing to pay for Bitcoin and what a person is willing to sell Bitcoin. The figures you mentioned about the number of the price volatility, the fluctuations that have happened over the past few years, since 2016, there have been 6 25% decreases in Bitcoin. So 6 times it's hit these large-scale sell-offs. And what we can see from that is that oftentimes that money goes into other cryptocurrencies.
Okay.
So you've got a lot of people, because it is so liquid, because you can get in and out and you can change your position so quickly, it's really helpful to look at the Bitcoin dominance index. So how much Bitcoin is worth versus the entire set of cryptocurrencies. And you saw what happened over the past run. A lot of people went out of Bitcoin and went into
Ethereum Classic. Which ones?
Ripple had an incredible run. It's not about necessarily. I like privacy coins personally.
You like privacy coins?
Yes.
What are privacy coins?
Zcash, Monero, any of the coins that really have a real cryptographic innovation behind them. Because don't forget, that's what we're betting on here. We're betting on cryptography, cryptographic keys going into individuals' hands, that cryptography will be an important development.
Okay,
and
so
that we'll use it.
Let's make a list, because people at home want to know this stuff. So you like Zcash?
Zcash is a great coin.
What else do you like?
Monero is a great coin. Both of them have competing ways to achieve privacy, but both of them try to tackle that same issue.
You just made the argument that Bitcoin is very liquid.
Mm-hmm.
You know, there are people that I talk to who say it's actually not that liquid. First of all, there's huge commissions coming out of it. If you're trying to sell, if you want to sell a lot of it, actually at any one time, not that liquid.
True. So when people say Bitcoin isn't regulated, the fiat on-ramps and off-ramps, so for cash, it's liquid, but there are limitations, particularly as the infrastructure has grown over the last while.
But it's not liquid, so.
But it is for other cryptocurrencies. And that's what I'm suggesting, is that people are going from Bitcoin to other positions in other cryptocurrencies and back again.
You're saying that's, well.
I would say this. I would say we've been quoting a lot about, first of all, the HFR, hedge fund research folks, I've talked about the number of hedge funds that we see trafficking in Bitcoin right now and what their performance has been. The question that I had back then and still have today is how much of that is on paper, on the ledger so far right now, and how much of it is realized? Because if you take a look, even on some of the more, I guess, volume-driven platforms for trading these things, the market impact associated with selling a Bitcoin, not that difficult, right? You start to sell 500 at a time or 1,000 at a time, which is what at the institutional level you might need to do to either fund redemptions for your fund, right, or put money to work if you're going to put money to work. All of a sudden, you start to see those liquidity profiles maybe not be as robust as you think they are, because that kind of money being put to work at any given time for these things does have the ability to drive prices up or down significantly on some of these exchanges.
A bunch, it could put a pressure on the stuff.
Yes, and mutual fund. You know, I remember back in my Wall Street days, I at one point traded a small cap fund on an institutional level. And I was asked to sell 1 million shares of a stock that trades 250,000 shares a day. Oh. So if I was to be half of the daily volume, which is massive for a stock, it would still take me God knows how many days, weeks to get out of that position. Right. And I would drive that stock down a lot. If you're talking about large-scale cryptocurrency investments, we're not talking the size of the equity markets yet. But if there are funds out there who want to either sell en masse or buy en masse because investor demand is driving it, I'd be curious what the market impact would be to buy or sell at that kind of level.
We've seen it in other cryptocurrencies. So Ethereum, with all of its ICOs this past summer, when some of these large ICOs that raised a lot of Ethereum moved their positions and started to manage treasury, we saw Ethereum come down. So that was close to that institutional level that you're talking about. Some of these guys managed to raise $200, $300 million worth of Ether for their ICO, and not immediately, but within a week or two changed positions and wanted to, let's say, diversify and even put out public statements about their treasury management so that they didn't just tie their entire company to the price of Ether. So we've seen those movements before. We've seen a lot of sophisticated trading, particularly on the crypto hedge funds, and they really do have a touch and feel for the market, and it's a little like waves. They'll go, and that's why I mentioned that whole Bitcoin dominance index. It's down to about 35% right now. It started the year at 90, it went down to the 40s in the summer, up again to the 60s and 70s in the November run.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.